Hello everyone, welcome to the channel. For last 1 week, I was not able to regularly make videos. But if you had watched my weekly prediction for this upcoming week, I had clearly noted and given to you from a 30 minutes perspective that this is a demand zone, meaning when the market retraces back to a demand zone, we also had marked this supply zone. So basically, if you had watched that narrative video itself, it would have been very clear for you to take a call option here and navigate the market all the way till here. This was a very clear prediction which I had made in the last Saturday, not in this immediate last Saturday, but the Saturday before that. So this is where we are at the moment, and I'm apologizing for not making consistent videos on a regular basis. Going forward, I'll try to make it on a regular basis. Okay, so what we can see immediately from 30 minutes perspective is we had marked few supplies. This was still some gaps which have been marked by me when it comes to supply zones. Let me just reframe this. So let's do one thing. Let's clear off all this and let's do a clear narrative so that it is very clear for us as to how the prediction can happen, and you guys also get to know how I make predictions, how I analyze the charts on a daily basis or a weekly basis. Okay, so this is where we are with respect to Nifty. So first things first, let's just refresh this chart. Yeah, so first things first, what we do is we go to weekly chart. Okay, and we first analyze what is the weekly chart, what is a trend in weekly perspective. So from weekly perspective, we can clearly see that the market had given a change of character here, had given multiple breakup structures on the upside, but it had broken down the structure and it has fallen. Okay, so eventually market is currently slightly pushing up slowly. Okay, if you see this momentum move, this was faster, whereas if you see this is a retracement move. Okay, so how far can this retracement move can happen is till the supply whichever we have as part of a weekly range. The supply I am interested in is this particular supply because this was an indecision candle which broke the structure, but before that we also have this gap. So I am marking the entirety of this as a supply. Okay, so given the momentum of Nifty at the moment being bullish for the last 2-3 days, we can ideally expect the market to reach till 25,125 in the upcoming days. Okay, so immediately what we can see from the same weekly perspective is there is a small indecision candle which broke this small structures. If you go to days chart, you will get to understand this better. So if you see this days chart, there is a small gap which is left out here, which is yet to be retested by the market completely. So this can be refined down to here. So this is where we are with respect to Nifty's chart. Okay, from a daily chart perspective, there is a gap lying here and there is a supply lying there. Okay, so ideally we cannot take trades based on days chart perspective because it will take so many days to even get the market back to 23,000 or up to 25,000. We will be missing so many trades. So then we will go to 4 hours chart. We will refine the entries based out of 4 hours chart. Okay, so the narrative will always follow the pattern in such a way that we analyze from a weekly perspective, understand the trend, we go to daily chart and narrow down the ranges. 4 hours, 1 hour, 30 minutes, 5 minutes. That is going to be your intraday time frame. So if you are interested in swing trading, don't follow this kind of a time frame. But if you are interested only in intraday, meaning you are going to take trades and you're going to close the trades on the same day and not going to carry forward the trade for the next day, then you should follow this time frame, meaning from 4 hours you should narrow down to 1 hour. From 1 hour you narrow down to 15 minutes or 30 minutes, and from there you narrow down to 5 minutes for taking an entry. Okay, so if I narrow down this range from 4 hours, whatever we had marked it from a weekly perspective, I still see that there is a huge indecision, huge imbalance which is left out here. So this becomes my ideal downward target when it comes to Nifty. Okay, but this range is going to be very huge. So immediate first target what we can see from this chart is this small gap which we have from a 4 hours perspective. There was a gap up opening, market broke the structure. Again, there was a gap up opening, market went up, and market is continuously moving up. So let it go up. It's not a big thing. So second thing what we can note from this chart is there is another indecision candle, meaning there is another small to small gap. See, these minute things and all will still act as a magnet for the market. Market eventually might come down all the way till here before even making a move up, is what this kind of a chart pattern will predict you. Okay. So then what we can see from the upward direction is there is this gap which we have here. Sorry, I'm taking time so that it is very clear for you to take trades or to make such kind of analysis on your own without anyone's presence also. Okay, so this is what we have as part of all these supplies and demands, whichever has been marked. Okay, so now ideally what we can see from Nifty's chart perspective is for a call trade to be initiated, what we have to see is a break of this supply. Okay, from here wherever we are, 423 to 623, that is going to be a 200 point range. We cannot miss this 200 points range move, right? So what ideally we can see is if market opens gap up, okay, somewhere in this range, somewhere in the supply range, 620ish range, and market gives a small negative reaction like this from the supply, then I am interested to take the market down at least till 24,322 first target, and to yesterday's gap of 24,120 as a second target. This is going to be my A plus trade for tomorrow. See, tomorrow is an expiry. I am repeating this point almost in every expiry. Make sure that you are trading in the next expiry. Don't trade in current expiry, because majority of your losses, right? If you go and rewind back your portfolio, you will find out that majority of your losses are because of huge quantity sizes when it comes to expiry, buying contracts which are at like 5 rupees, 6 rupees. Imagine a person having 50,000 rupees as capital. On a normal day, what he would do is he will buy one or two lots at contract which is trading at 150 rupees or even 200 rupees. That is going to be an ideal trade plan. You will buy two lots, you make a certain profit, you walk out of the screen. But during expiry, that 200 rupees contract, right, would come down to 10 rupees. So what he would do, he would not choose a contract which is at 200 rupees. He would rather buy some 500 quantities or 1000 quantities, 1000 lots in the same 10 rupees contract. So what will happen is the same 10 rupees contract will go down to zero and he will end up losing your capital. This is a repetitive process when it comes to option buying. So the best advice I would give you is do not trade in the current expiry. Please trade in the next expiry. VIX is also pretty low, which means at the money prices will be extremely low and there will be a very, very huge decay. Okay. So second ideal thing for us is if market opens pretty big gap down. Okay. So somewhere here, even in this range, if market opens gap down like this and gives a positive reaction, I'm interested to take the market higher. Okay, so these two are ideal scenarios. But if market opens flat, okay, so let's go to some 30 minutes time frame. So if market opens flat, then this range, once again, so this range, whatever we have here as this small candle, the low is 24,382. Okay, so draw a line somewhere here. Okay, 24,382 as a lower line, and draw a line somewhere here as high line of today. Okay, so the best case scenario for tomorrow is if market opens flat and travels in this small range for close to 12:30 or till 1 o'clock, and 1 o'clock if it blasts on the upside, then I am interested in call position. See, I am not interested in put position for tomorrow. Is market is still bullish from 4 hours perspective or from 1 hour perspective, market is still bullish. So I am interested in taking the market higher till 24,623 at least, because this kind of a small range bound move will make sure that the options are getting decayed, and huge call unwinding or put unwinding can happen in one direction. I am more interested in call unwinding, because like all the sellers who have sold call would start to close off their positions once market starts to make a rally. So this will eventually result you in a gamma blast, wherein your 5 rupees contract will blast up to like 50 rupees or even 100 rupees. I don't advise you to buy 5 rupees at the open of the market itself. Don't do that. If the market ranges between this place till 12:30 or 1 o'clock or 1:30 also, around that 1 o'clock to 1:30 time, if a breakout happens on the upside direction, giving a new change of character, then on small pullback I'm interested to take the market higher. I hope this video is educative. Thank you so much for watching. We'll meet in the next education video.